as we jump into those slides together, we're going to be able to see what we're going to be working on. It's Yvette from KMC University. So glad to see you. And as I stated, we're going to be playing around with the compliant discounting game today. Sometimes it's a little bit difficult to know exactly what you're going to do. And we're going to get started with those slides so that we can get moving quickly. As you know, I try to keep it power packed and moving fast as we go. So as we start the slides now, we're going to be able to move along and get those things underway. Are you ready? Welcome to 2021. So today, while we're talking, we're going to discover how we can do legal discounting options. So many times here at KMC University, as I'm bringing in clients or coaching my own clients or just doing consultations, overall, we notice a lot of issues in the way that people are discounting, even with some of their compliant coupon offers that they think they have. Just because someone told you to do it and they're getting by with it down the street doesn't necessarily make it okay. We always need to verify those things, make sure that they dot all the I's, cross all the T's as far as any federal regulations, any type of other things may be going. So always want to make sure we have that in place. We're going to also recognize where you may have some inconsistencies in your patient fee schedules, learn how to properly implement some hardship agreements in your office, and when it may be appropriate to use something more like a professional courtesy policy. So again, these are the things that we'll be covering today as we move into the rest of our slides. And I do welcome you. I do appreciate ChiroSecure giving me these opportunities to speak to you and coming to you again from KMC University. So as we talk about this, one person said, a very famous person said, your fee is your fee is your fee. And you know, with real estate, it's location, location, location. But when it comes to having compliant fee systems in your office, it is your fee is your fee is your fee. And we want to always make sure that we're abiding by those rules, dotting our I's again, crossing those T's, just so we can be compliant, rest at night. Don't worry about the fee police to come get you and say, oh, that's wrong. And we'll figure out who some of those players may be. And then we need to figure out where are the discounts coming from. So we'll have some that are imposed, that are like some of our regulated, contracted, and then we may have some of those that are a little bit more elective in nature. And we'll talk about those. So we'll get a clear understanding about that as we go along today. So as we continue to move forward, I've kind of wanted to start with some of the dangers and pitfalls that you could fall into if your fees are not compliant in your clinic. So oftentimes we'll see inducement violations. We're not necessarily doing it to induce, some may be, but we're not necessarily doing some of our practices to induce, but it's not what necessarily our intention was. It's what the perception is by those governing entities. Many times, anytime we have an issue in our fees or any other area with our billing, it snowballs into the next area of False Claims Act. Nobody can afford these things. Number one, you don't want to have recoupments. Number two, you don't want to have any issues with what you're going to be noticing when you're sending over to a parent, they're saying that's inappropriate, or we're going to find out somebody else who's playing some really dirty tricks lately as we go along. And then the anti-kickback violations. We need to make sure these are not being identified with our office, and we're going to learn how to safeguard that as we go along. So Medicare vocabulary goes inducement and remuneration. So when we're talking about that inducement, that's influencing someone to come in and maybe giving away something for free that's maybe higher than the value that's allowed. Or we're giving away discounts through our waiving of copays, deductibles, and things like that. You may not give any item or service away that exceeds $15 or $75 aggregate to a Medicare patient. This really falls over into federally funded patients. And what happens is when it falls over here, generally you're finding a lot of the payers piggybacking on this and saying, hey, you know, we can't do this for our patients either, or our patients. You need to have fraud, waste, and abuse in place because you're dealing with us. Everybody's moving to this model, but right now we know that there are penalties imposed from federal entities when we do inducements and remunerations, waiving copays and things like that. So it's in the regulation. We have the patient solicitation anti-inducement provisions. You can see it here on the screen. Someone who's offering or transferring to a Medicare or Medicaid beneficiary any remuneration that the person knows should or would likely influence their decision to come in. This is applicable to Medicare and Medicaid. We know that VA moves over into that, and we have some other programs when you're talking about the Affordable Care Act and some of those things. You got to be very, very careful. And why I said you can't afford it, look at the bottom sentence. It says up to a $10,000 penalty for each wrongful act. Oh, all right. Well, let's get it stopped now. We can't afford to be over here and playing in the non-compliant game, where it's like playing Stratego, we're playing chess. We got to move our pieces just right. We can still get to the other side and win what we want to win, but we avoid being captured and avoid the bomb when you're playing Stratego. And we just want to make sure that we're matching the right places together and we're still moving towards our goal of being profitable, getting our patients in the door and not scaring them off. So as we go ahead and move to our next slide, we're going to talk about again a little bit more about that remuneration. We're going to waive your copay. I had a local dentist ask me several years ago when I was working in the local clinic. He said, "What my office, what we'll do is we'll have a doctor or even our staff members get treated. We'll submit it to their insurance just to help them meet the deductible. And I'm asking you to do that for me. I know you do a write-off for doctors, but I want you to submit it." Because I know you're going to write it off, and I want that way it'll help me meet my deductible. It's not going to hurt you guys. I'll still pay the bill. He did not like my fight back. I said, I can't do that. I cannot waive your deductible or copay. I don't have any financial hardship in place or anything saying that this is okay for you. He got a little tiffed. He said, I do it at my office. I can't help what you do at your office. We can see it's usually well laid out, especially in our federal programs, but we can also find it in our commercial programs. So always be sure that you're just, again, dotting I's and crossing T's, that we're playing our chess pieces or our Stratego pieces right, and we're being a little bit more intuitive of where those bombs may be laying there waiting to capture us. So we've got to be so careful. We had a poor guy, all in one chiropractic. He was in Iowa. And this is out. This is not something we're displaying of one of our clients. This was something published. You can go find it on the Department of Justice website yourself. Probably could do it through the Google search. Any type of search engine would bring this up. But while he was doing, he's like, oh, my poor Medicare patients, they can't afford eSTEM. I hear this all the time. I'm not joking. I am not kidding you one bit. I hear it constantly. Well, they can't afford it. Medicare doesn't cover it anyways. Why does it matter? All I have to do is pull this up on the screen and say, this is why it matters. They feel, even though your intent was to help them out, they feel your intent was to influence them to come to your office because maybe Dr. So-and-so down the street isn't offering that, but you're sitting here going, yeah, Yvette, but Dr. So-and-so down the street is offering that. I've never talked to them. I don't know what's going on there. And we can't help if they're doing it wrong. It doesn't make their wrong be our right. So we've always got to be careful. But this poor guy, in his innocence and just trying to be nice, ended up with a $79,919 payback that he had to do. And you can see there after the highlighting, it hit the anti-kickback statute and the False Claims Act happened between. And look at that span of time they looked at. They looked at a long span of time. You can pull it up and read a little bit more. But the thing is that you've just got to be so careful. And as an old saying goes, don't let your good be evil spoken of. Always make sure that if you're going to do good, you can do the good or you find a legal way to do the good. And we'll talk about that. So the biggest thing that this represents is that we want to avoid dual fee schedules altogether. This is not something that you want to have in your clinic. And I'm going to just kind of hit the nail on the head here in a minute when I tell you why. With somebody you're not expecting it to be, somebody playing tricks. I told you earlier, they're playing these crazy tricks on everybody. But we want to figure out what is the dual fee schedule because it can misrepresent charges to a carrier. I had the pleasure to do an on-site back in October. Talked about it a couple times since I was here. They were just having the patients pay $55. Here, I'll take your credit card right here, $55. And they were billing the insurance company $150. I'm like, how did you know that was their co-insurance, their copay? Oh, well, we just do it. We're out of network. I just sat back and I said, well, that will stop. It has to stop now. We have to clean this up. And needless to say, they're probably one of the top producers with one of the medical discount plans I'm going to talk about here in a little bit, because we got that straightened out for them. Again, False Claim Act violations, and then it may very well violate your provider agreements. Think about it. We've got Blue Cross patient laying here and Blue Cross representative behind them. PI patient here, PI representative behind them, cash patient here, cash patient behind them. Everybody has the same thing. Everybody goes to the front desk together. You will bill your insurance $250, we'll bill you $250, and that'll just be $50 today. Same service. Don't work. It and very well may violate your provider agreements, but keep watching. Here it is, the PI complex. I cannot stress with you how much this is happening. We had one of our members call in the other day. What do we do? Oh Lord, what do we do? Well, we're like, well, first, may we do a consultation with you to see if we can get this worked out together, figure out what you did, figure out what needs to be cleaned up and what we need to stop. And we looked at it, and what had happened is they had Geico give them a call and say, I don't have insurance. I was just calling to figure out if you have a cash break for your patients. Oh, yes, if you don't have insurance, your visit will only be blah. Next check, that's what they send. And guess what? They reported them. They reported them for having a fee schedule that they were giving to cash patients that they weren't giving to them. There was no legal reason. So everybody starts with the same fee. There was no justifiable legal reason on that next line for a deduction that said they should get something. There was nothing regulating it, nothing contracting it. They were just giving it because that's the way they do their cash patients. Well, State Farm and Geico doesn't understand why that doesn't pass along. So we end up having some pretty major issues there. Got to clean it up, got to write some policy. Luckily, we were able to work on it a little bit creatively with them. Obviously, some re-education of the staff up front at the front desk and how they'll answer the phone needs to take place. But overall, their fee systems needed to become compliant. So we talked a little bit about those imposed discounts, the ones you can't do anything about. You sign the dotted line, you get the dog and pony show that comes along with it. So those are the regulated, which is more like your Medicare, your workers' comp, some personal injury, no fault, and Medicaid. Can't do anything about it. It is what it is. Now, your workers' comp and personal injury, mainly your personal injury, can differ from state to state. Sometimes you can expect your full reimbursement of whatever your charge is. Other times you're going to be part of some type of regulated or some type of contracted because you've got a silent PPO, or maybe they're piggybacking on some other type of pair. Then we have those contracted discounts, which are, I signed the dotted line because I want to be a provider with Blue Cross. I signed the dotted line because I want to be a provider with Aetna, this payer, that payer. These are those you can't avoid. These are the conundrums you can get into, especially when you have those per diem payers that say, I'll pay you $65 a visit no matter what you do. We have people all the time trying to circumvent that. We're like, go back. First, read your EOB. Did it tell you it can go to patient responsibility? Now go back and read your contract. Look at your medical review policies. Make sure that you know what you're doing is appropriate. This is why you can't take your fees lightly in your clinic. They have to be every I dotted and every T crossed in order to be compliant and be most profitable. I think when you're looking at imposed discounts, one of the most profitable things you can do for your office is, one, take the services that you do and find out, does that payer exclude them? Aetna has a very long list of CMT services they consider experimental and investigational. Are you on that list? Does it even make sense to go in? Is everything you do on that list of experimental and investigational? That's one stop. The next is, if they won't give you your fee schedule or a fee schedule prior to enrolling with them, ask a peer down the street, hey, what does it look like for the fee schedule for this insurance company? Know what it costs for you to be profitable in your clinic, and then gauge if you can go in before you sign the dotted line. Because remember, once we sign the dotted line, we are now either regulated, contracted with an imposed discount. Can't do anything about it till you get out. And with Medicare, we know you can't get out. Had to give that commercial one more time. So that relationship with the payer and network, it really starts here. The doctor joins the payer, the patient pays the premium, they have an insurance card, you have this type of agreement. Everything comes back to the central hub of that payer and that network telling you what you can charge. That relationship is between the provider and the patient, but again, a lot of times we're relying upon that, and that requires the enrollment of the doctor and the enrollment of the patient into that plan. So again, this is going to be part of your imposed, contracted, regulated type of discounting that'll go on. So we'll skip over to the next part, which everybody's probably wondering, why, Yvette, are you taking so stinking long to get to this part about it? I need to know how I can do discounts. You told me what I can avoid. Now tell me what I can do, because now that you scared me half to death, I need a way to deal with these patients that are cash, or maybe don't have a great insurance plan, maybe don't want to use their insurance plan, maybe have limited benefits. So let's go there together. There really is one fee in your office. That is, if your spinal CMT for a 98941 is 55, then it's 55. Then it's 55, and it's 55. Next payer time, it's 55. Everybody starts at the same level. Now, the next line down, why? Why is it not 55? Tell me why it's not. Well, because it's regulated. Okay, great. Well, because it's contracted. Great. Well, because they're a cash patient. Okay, can we talk about that cash patient for a moment? How large is that discount? Oh, we discount them by half, sometimes 75%. Wrong answer. We've got to make sure that's within spec. Although the federal government has some rules that we believe are 5 to 15% on a time of service discount, do know that your state or your payers may have something to say. But again, we've got the actual fee. Next line down, why shouldn't they pay that fee? And we've always got to make sure we have checked with every entity that we're doing that appropriately. So again, the discounts go imposed and elective. We're on the elective side now. These are the ones that are at your discretion that you decide to implement in your clinic. As we move down, we'll go the other direction. We can see that those are elective fees, could be your 5 to 15% time of service savings, financial hardship, professional courtesy, or maybe your discount medical plan participation, something like Chiro Health USA, to where they are set up in most states. I believe the only state is Washington, where they're not in, where you can offer your patients a compliant discount. Go to bed at night and know you did it right, setting up your own fees in your office. So even though it may fall in kind of that contract land, it's your fees that you picked. We already know insurance isn't going to pay you your full fee. You're not going to chase your tail with this cash patient. Why not give them a little bit of a discount? So they don't have to pay you $565. Maybe they pay you $200 plus the joining fee to Chiro Health, which covers them and all their dependents for an entire year. It's crazy. It's like Costco or Sam's. But these are the elective discounts that you can do, but you have to do them right. Again, dot the I's and cross the T's. So again, actual fees, discounted fees are where we're going to focus our attention. And here are 4 possible fee structures that will help you pass the muster when it comes to doing this compliantly. 1, charge your actual fee. My fee is my fee is my fee. And if you're cash, that's my fee. That's my fee. Absolutely. You charge it to the insurance company. They come back and say, write it off. You write it off. Everybody going out the door gets charged the same. That is super compliant. No issues. Everybody pays your actual fee. You're not discounting. You could charge a reasonable time of service of 5 to 15% for your federally funded patients. Always make sure to see if your state has a more strict rule. Whichever is most strict will rule and be the one that you'll have to implement for your office. But when you find the state may be more lenient, that may apply towards those outside those federal programs. So charge a reasonable time of service discount, 5 to 15%. For me personally, I would not want to think about, this is federal, you get 15, this is you get 30. I would pull out my hair. I would either do 5 to 15 based on my bookkeeping savings, and or do something like Chiro Health. Make it simple. Don't complicate it for your patients. We're already in uncertain times with money, and they don't want somebody feeling like they're jacking around with their money. They want to know, This is what it is, or this is what it is. You can pay our full fee. You can join this discount medical plan, and this is what your fee will be. Which one would you like? Let them make the choice. Give them a choice. You could use a network-based legally discounted fee of choice. That's ChiroHealth. And then you have those legal options with the hardship indigence policies for those patients who qualify. And I did say qualify. So these are the ones we'll look at: ChiroHealth a little bit, hardship, professional, and then billing for family members. I'm not going to cover a slide specifically on billing for family members. I just want to cover it verbally with you today. Please know that with Medicare and many payers, they restrict you from billing your immediate family members, and they do give you a list of what that is defined as. They say if your mother, your father, brother, sister, and they go on. It's a list, probably if you're looking at the page, about that long, that tells you who you should not be billing to the payer. A lot of times we find family that kind of tempted to help exhaust a deductible for their family members, or I'll just send it in. I need a little extra cash. Family's demanding to pay. Please look at these rules. Please make sure you're dotting your I's and crossing your T's. So, the compliant time of service discount. It is based on viable bookkeeping savings. Pick one of them. What is it truly? Look at your overhead. What is it truly saving you to not have to send the claim, chase the claim, get authorization for the claim, go back and get authorization again to see them for 5 more visits, chase your tail, wait, appeal, do all that, send a statement? What are you really saving? Are you saving 5%? Great. Are you saving 15%? Great. Write a policy. There's your time of service discount. It's often found that a lot of people are using something that's not within those guardrails, and it's unreasonable. When we get up into 50%, or, oh, I just have a flat rate for cash patients. Can I ask you what you're billing the insurance? Well, typically about $180. Okay. What is your flat rate for your cash patients? Oh, it's 50. They just come in whenever. And the other one I hear that makes me want to scream is, oh, well, when they're with their insurance, we just always use the 98941. And when they're cash, we just use the 98940. I'm like, oh, Lord, you can't play with your codes. You can't play with your fees to make it fit what you need. So you got to find what you need and get it to fit what you have to have. So, understanding again that when we're using these time of service discounts, there are guardrails, and they really should be, because it's a time of service. Be paid in full at the time of service, maybe lingering just a day or two after, but it's got to have some parameters on it, not loose-ended. So that relationship, when we talked about ChiroHealth USA, kind of works like this. I love them, by the way. Before I came to KMC University, I said there were a couple things I wouldn't live without in practice, and that was CHUSA, ChiroHealth, and KMC, because they helped me to get to, to the knowledge I have today. They were part of how I got here. And when I joined ChiroHealth, what I could do was now legally offer discounts. So at the office I served last, we were a specialty clinic. I know a lot of you say, hey, all of us are specialty clinics, and we truly are. But we did something that no one in a very large geographical region did here. We had people travel in from thousands of miles away. We had people that traveled in from states. We had about a 5-state surrounding area that came to this practice. And so we needed to make sure that we had some way to compliantly offer them a discount. So we looked at ChiroHealth USA. And here's in that specialty niche, our typical first visit was $565. It's just what it was. We knew when we billed Blue Cross and Blue Shield for those services that would qualify, that generally we could get back somewhere around $370. When we billed Aetna, we're coming down closer around $225, and we're like, number one, we're not chasing it. We're not having to get authorization. We want to discount more than 15%. What can we do? We went with ChiroHealth, and how it ended up being that $565 visit came down to $200. All the patient had to pay that day was $249. They paid $49 to ChiroHealth, they paid $200 to us, and they didn't pay $565, and they kept getting all the discounts that we made available through ChiroHealth from that point forward through the rest of that year. So doctor joins. He sets his own fees of what he wants it to be. You can do discounting for multiple family members. You can set it up that, hey, I want to cap these visits here, or, oh, I want them just to be this percentage off, or I want this service to be that. Well, don't include that in my cap. As you see, I'm telling you all kinds of things you can do. You can't do that with Medicare. You can't do that with a payer where you can order it and have it your way. But with ChiroHealth, in many ways, you can have it your way compliantly, and your patient has an option. If they don't want to pay 55 and they want to pay 35, then they join ChiroHealth. If they say no, then they really said, I'll pay 55. No problem, cash, check, or credit card. But the patient joins, and again, they and all their dependents are covered. This relationship is back between that doctor and the patient, and we have compliant discounting. I cannot tell you and stress to you enough, this is a huge solve all when you're looking at discounting in your practice. The other one may be that professional courtesy. Did you know that you actually need a policy when you are treating your staff members for free? Please don't play that game if I'm going to help them meet their deductible. Please don't do it. Please. You can't waive the deductible. Their insurance is banking on you to collect that. This is part of the plan they chose. But if you're going to treat them and your immediate family members for free, have it in your professional courtesy. What about others in the community? Maybe it's all the first responders. Maybe it's ministers. Maybe it's all other doctors. Define that, put it into policy, but for the love of the Lord, don't be like what that doctor asked me to do. He didn't get me to budge, which was, no, we offer this service for free. I cannot charge your insurance for something we offer for free to you, nor will I help you meet your deductible. The only way I could have done this was told him, you are going to forego our professional courtesy. And when that bill comes in and it tells us what your deductible is, we will have to assess that charge to you. So keep in mind, this is one legal way. You just got to make sure you're dotting your I's and crossing your T's. And no, this isn't for all your friends and the quick way. We'll just do a bunch of professional courtesy. No, there's still dotting of I's and crossing of T's that need to take place. What about hardship? First visit, take their word. I can't afford it. Okay, well, we offer hardship for people who can't afford service, and we kind of can get by with taking their word the first time, but not after that. We actually have to verify. Don't just take their word. In my office, I had one way you could qualify. If you were on government assistance and you could show me proof of government assistance and I checked it on a consistent basis, then I would qualify you. I did not think about some of these other things to implement. Ours was just pretty short and sweet. We had ChiroHealth and we knew we could fix most problems, and we had payment plans. So we knew we could fix most financial considerations for patients. But that was one consideration. And when I did it, it's like you can come for $25 a visit. If you're having an exam, it's another 25. If you're having x-rays, that's another 25. So the most they ever paid was 75, but that's the way my hardship was set up. But I couldn't just offer it because they said they did, especially if they're coming in with their Prada shoes and their Gucci purse, or their nails are always done. I'm not disqualifying those people. I'm not saying they're in a financial hardship, but I'm saying we have to use a systems of measure to verify this, or then this is not having an I dotted and a T crossed. We do know that those federal poverty guidelines are about to come out. They're just right at it. They're always a little slow for some reason. But once they come out, we'll be able to see what those federal poverty guidelines are and what percentage that particular patient falls under. You have the ability to set that up down. You can see this is one of our forms, by the way, that's in the library. If you're a library member, you can find this in the office management section 1, and that's going to be in lesson 3. And you'll be able to go in there and tweak. You can see any of that grayed out area is something they can do, but you can set what your fees will be, put your exclusions in there, and make sure that you're able to just do this appropriately, going by those guidelines. Again, a little bit of leeway with you on what you want to set up. If there's any questions on this, this is a bigger topic than what I'm able to cover here. Definitely let us know. And just a little bit of role playing. So let's say you treat Medicare Part A and Part B patients. So are you enrolled? No, we already talked about it many sessions ago. We can't see the Medicare Part B patient. If you are, you've got to charge the appropriate fee for the excluded services. Even if they're a QMB, dually eligible, you still on the excluded services have to. You've got to bill on behalf of them. Your collections will be based on their copay, their coinsurance deductible, figuring all that out. There's one of your regulated. Then what about the Part C? If you're not enrolled, we feel these are cash patients to your office. You can see down at the bottom that we have cash paying patient not insured. We have actual fee or that discount medical plan. They get a super bill. Make sure if you're giving a super bill and you're doing discounts, that there's a line item that shows what that discount is. Don't send that patient out the door with, oh, it was $100 and you only charged them 50 because they're going to get paid to come in your office. If their insurance has an allowable higher than your 50, they will actually make money coming to you. So it needs to have everything listed there that shows that actual financial transaction that you have. What if you're not enrolled with the insurance plan? Then you have that cash play game that you can do again. But over here on the other side, you're going to be abiding by those contracts, looking for deductibles, obeying those rules of medically necessary and active maintenance and all that type of stuff. But you've got to bill according to them. You sign the line, you're there. You can see a little bit with the non-par and the par there at the bottom. What about workers' comp? Well, with some workers' comp, you have to be enrolled in order to treat them. So please make sure there's a lot of rules in my state alone that you got to jump through hoops if you weren't the first person who saw that patient. A little bit of here that you can look at. But if you're one option with PI patients, if you feel like you're always getting stung by it, make them cash patients. When they get paid in their settlement, have the lawyer incorporate what they already paid to you. That's probably one of the most simple ways to get rid of the problem of lingering bills. So this is what it looks like when you're done setting up your fees. We've got the doctor's actual fees up here. Next rainbow down is our contracted fees, our regulated fees, and our hardship fees. And when it all starts coming together, we can see that Chiro Health USA, that legal way to do a discount, gets to fall in the green. It's right there. It's part of our contract, and we got to pick what it looked like. Imagine that. It wasn't $9 for a therapy, unless you want $9 for a therapy. I have seen reimbursements be that low or say, oh no, that's bundled. Oh no, we don't pay for that on the same day. Chiro Health USA is a great workaround, especially for high deductible patients. You can see that you start piling in those other things. With Chiro Health, you'll have those cap fees or your discount and name it what you want it to be. Make it that way. It includes everything. Oh, no, it includes everything but this. This is you. It's an elective discount. You get to set a lot of it up. Then you've got some of the other things that come down in there where you've got this hybrid of Medicare and Chiro Health. What? The same service cannot have Chiro Health, but we know Medicare only covers spinal CMT, so there's a bunch more we could apply that to. So it makes a very beautiful product for those patients. And then down at the bottom, we have our hardship fee schedule. This makes it all look beautiful. One pretty rainbow. Everything's in there. Everything's compliant. Nothing's out here on the perimeter that's kind of not okay. We fit all of our discounts nicely into this beautiful rainbow to where we can rest at night and be compliant. So you're free to choose, but you're not free from the consequence of your choice. So be careful when you're doing fee changes in your office, making sure that you're doing it by dotting I's and crossing T's. If you're a member, if by chance you didn't know this and you're a member, we do free fee schedule consultations. I either help you get Chiro Health USA put in place, which we will. We'll take you all the way up to it almost being implemented, just what they have to do at the very end. Or if you're not interested in that, we still do. If you're a member, that's something we do. It's free for you as a member. The very next thing I want to show you are hot topics, and then we got to go. Hot topics, 1-1. That ABM form had to be implemented. Look at the bottom of your form. If you're on version 6, 2023, starting January 1st, if you've got more questions about what you do about the one signed in December or November, you're going to have to give us a call. But as far as the new ones being signed, ABM must be implemented. When you're looking at box D, your mandatory is spinal CMT only. Don't have anything else on it and know when to issue it. Big issues going on, misconceptions going on in this industry regarding how to use an ABN appropriately. And it can get you in big trouble because when they pull your records, they pull the ABNs. E&M coding went into effect January 1st. One code is gone for the new patient. Do you know which one it is? You should never be using the 99211. That's an established patient, but there's one of them went away. The change in the coding methodology, how you'll get to it, is all lying up over on the medical decision making. And although the AMA and all those rules have come out and said, hey, history and exam you can do it if it's warranted. For us as a profession, it is warranted because that's how we establish the medical necessity. Everything is built off the history and the exam. Next down, Medicare fee schedule update. We had a big 10% drop this year. It was a huge disappointment. In the middle of COVID and everything shutting down practices, it shocked everyone. However, we saw about as quickly as those went up on the website, they got pulled back down because the COVID relief came about through a bipartisan act that removed the full 10%, gave us back 3.75%. The reduction is still sitting at 625. And I'm just telling you, if you want to be a part of the solution and not have to sit back and accept the problem, contact your state representatives. Remember, it's time to verify benefits again. And if you don't remember why, go back and listen to a couple of my sessions a little bit ago. One more thing, if you are a KMC University member, please keep in mind you're going to be seeing a lot of stuff coming from us going this spring. Don't put your head in the sand or not look at an email because there's a new website launch. You're going to go to our website and you're going to go, what happened? Make sure you're paying attention. And if you have any questions with what we've discussed today, feel free to give us a call. We're always here to help. We'll be more than happy. That's 855-832-6562 or info@kmcuniversity.com. Next week, make sure you're here because Janice Hughes will be presenting again. It seems like she follows me up a lot, but I think that's really great. And I've watched these people and they're wonderful. If you missed these, just let us know. We're here for you. Good to see you. Thank you for spending some time with me again today. Bye-bye.